Asian equity markets were mixed today in the wake of China's PMI data. The figures highlighted an increase in Chinese manufacturing for the fourth straight month. Trusted sources Bo Zhuang is on the phone with me now from Beijing. Bo, which sectors in particular are driving this boost, and how do today's results tie in with expectations of a Q4 slowdown in China?
Actually, today's PMI data actually beat the consensus. So the overall PMI data came in stronger than the consensus. And most of it actually can be attributed to the new output PMI sub-index, and which have improved 1.5. But I have to highlight that the other ones, the export order actually have already started to decline. This is also the first decline in the last 4 months. So this actually is quite in line with the expectation of we expect fourth quarter's GDP to slow down. And why this discrepancy? I think that because in theory PMI means the faster sequential growth, but the PMI could also can be heavily affected by the sentiments. That's first. Secondly, actually the last year's fourth quarter, actually we have a very strong GDP growth base. So for that reason, actually it may result in this year's fourth quarter year-on-year GDP growth to decline.
What does China's shift away from an export-led strategy indicate about confidence in domestic consumption growth? Is today's data an indicator that increasing demand consumption can in fact support the Chinese economy?
I think overall the Chinese government wants China to rebalance, so they are somewhat confident on the domestic demand to generate growth itself. But so far today, we have seen this year Chinese domestic demand was mainly supported by the government spending and also infrastructure investment growth, which is not coming from private sector consumption. And then I would say the overall China have actually shifted away from export dependence, because we can see from the current account balance to GDP ratio have declined from 10% in 2007 to about 2.3% last year. So I would say that China is no longer export dependent, but they are quite investment dependent in this matter.
Similarly, what could this strategy mean for the Chinese currency? Can we now expect a scaling back of renminbi usage within the export-import industry? And in turn, what does this mean for the currency's purchasing power?
I would say this is more like, because we have seen in the past few years that RMB actually is the almost one-way bet. So RMB continue to strengthen against US dollar for quite several years. But I think now I believe that RMB is approaching of the equivalent level. So because as I mentioned, current account surplus actually have shrunk quickly in the past 2 to 3 years, and now it's very difficult to argue that RMB is much undervalued anymore. And then more importantly is that the Chinese policymakers are increasingly convinced that RMB actually is close to its reasonable values. So I don't think the RMB will appreciate or depreciate further. It's more likely to stay stable. And overall, the use of the RMB usage within export and import, I think, will continue to improve, because the Chinese government is promoting this RMB internationalization. Given the China's size of the Chinese trade, it's more likely that for other emerging markets or even developed markets to be involved more in the more export trade to be settled in renminbi. So I would say overall RMB, the purchasing value power should remain quite stable in the next 1 to 2 years.
Chinese communist leaders meet in November to outline economic policies for the next 5 years. While in the years since China's new leadership assumed power, it has repeated pledges to restart the nation's movement towards economic reform. Realistically, what do you see emerging from these talks?
Because as you mentioned, the plenum is happening in 10 days' time. So this plenum actually is a very important event, but market actually could be disappointed by this event, because typically in the past 3-4 decades, the plenum always release some of a plan which is quite ambiguous, which is not implementable. It doesn't consist of any implementable plans. So we don't actually expect too much to happen during the plenum. But on the other hand, I think it's more important information we have to look for actually is within the work report, which will be delivered by the new President Xi Jinping, what kind of the reform priorities he will put on his work report. So we expect selected reforms to be carried out in China. For example, we expect the more aggressive reforms on resources pricing and also the hukou system, which is the household registration system, and also some reform and physical reform to happen in the next few years. But I have to also highlight that we do not expect a big bang reform to happen on SOE front and also on the capital card liberalization front. Do bear in mind that all the reforms happening in China always happen in a gradual pace. So there won't be a big bang one-off big reforms, and obviously we have to track these reforms of their execution and the implementation of these reforms in the next few years.
Bo, many thanks. Stay with us today. We've got plenty more coming up, including a look at the bits. That's right, I'll be discussing the currencies of Brazil, India, Indonesia, Turkey and South Africa. So don't go away.